Sean Edwards, welcome to Trade Finance Talks TV.
Thanks, Deepesh. Lovely to be here.
So here we are in London at ITFA's Christmas seminar and party. But it's coming towards the end of the year, and I'd like us to do a bit of a recap because a lot's happened.
A lot, too much.
Exactly, for the trade finance industry. So let's try and do a bit of a quick fire on some of the key themes. And actually, just following on from the first session in today's seminar, digitalisation of trade. Can you summarise some of the key themes?
Okay, key themes are we've had. It's a bit appropriately for the World Cup. It's a game of two halves on digitisation. Some really bad news. We've had trade lens, we trade going under, kind of move away from blockchain. And for a lot of people, that, especially the move away from blockchain, for a lot of people equates to trade digitalisation isn't happening. I think the important thing to remember is digitalisation is not just about blockchain. Blockchain definitely has a use, and it's a very potent use case of certain things, but it is not the only. Thing powering digitalisation. What powers it is cost efficiency, the desire to move down and into the supply chain, do the deep tier financing, to get to the smaller suppliers, to solve that trade gap. The 1.7 trillion trade gap, which has gone up since last time. So digitalisation really practically is the only way of doing that. I mean, without it, it's going to be extremely difficult unless there are other incentives or subsidies involved, and that hasn't really worked. But on the good news side, you've had the merger of Comgo and GTC, or rather I should say the purchase of GTC by Comgo. That's really flipped Comgo into really a big player now. Full disclosure, I'm on the board of Comgo, so followed that for a long time. I think it's something that makes a lot of sense, but it shows that there is a market for digitization. So that brings great technology. It also brings a client base. The problem that a lot of the platforms have had, and some of the bigger ones are having, and it's relatively well known, the close down, would say also, of the payment commitment module on Marco Polo. That's the inability to scale. That's because of a lack of adoption by corporates ultimately, and I hope and think that actually Comgo GTC won't have that problem, but the commercial case now needs to be made, and that takes longer.
Sure. I guess following on from that, the legal framework's changed significantly
big
in a positive way.
Yeah.
Talk a bit more.
So big opportunities for lawyers. I'm a lawyer. Normally it's the only job I get paid for. So there are big opportunities now in trade document digitization. So that's both bills of lading. Of course, they've been around in digital form for a long time, but they've had to rely on a rather clunky sort of workaround system. But the big hope now is digital financial instruments, so bills of exchange and promissory notes. The changes I'm talking about, everyone is very excited about the electronic trade documents bill at the moment in the UK. That's making its way through. That's a bill that was backed by the UK Law Commission. So ITFA and ICC UK worked very closely with them to bring that to fruition. That's going through an expedited procedure through the House of Lords, then it will go to the House of Commons. That was one of the first panels, as you said, that we're very confident that will become law next year. Why is that important? It's not just for lawyers. 80% of trade documentation globally is governed by English law. That's not the end of the story, but it's a large part of the story, and it's a big psychological boost. Melita adoption, not just legally, so we have that in Singapore and in Abu Dhabi global markets, but actually some of the new e-commerce agreements, free trade agreements, have an e-commerce chapter. There is testing at the moment of the UK-Singapore e-commerce chapter using actual, proper use cases. So this thing it's getting up ahead of steam. What I always say, people always say that COVID advanced digitization, and I said all it really did was got people using digital signatures. And I think everyone thought, once we got more or less out of COVID, that actually we would have made a whole lot of progress. We haven't. I think the facts have shown that, but we are, I think, on the right track, but it will take time.
What about appetite for lending to both smaller companies and corporates? Because we saw a bit of a slowdown in trade slumped, but I think it's gone back to pre-COVID levels. But would it be fair to say that appetite to lend trade finance has gone down?
So if you look at the volumes, they've gone up considerably, and that's because of commodity prices. Okay,
Yep.
so the big story at the moment in trade and globally, of course, is inflation, hyperinflation. That translates to cost of living on a political level. At the trade finance level, it reflects in bigger facilities that are needed, bigger liquidity, more liquidity that's needed for commodity traders. That sucks out a little bit of the air from the other users of commodities, other users of trade finance. And so the people who are coming, increasingly getting pushed to the end of a longer queue certainly are the SMEs, in my opinion, which is why we need to find ways of trying to work towards them. And there's a lot of things that need to happen there, including digitization, but including putting probably some relaxation or just a better approach to KYC AML.
Yep.
The last figures that we have for 2021 from Boston Consulting Group for the ICC Trade Register showed actually trade had gone up. The volume of trade had gone up from pre-COVID, and defaults had gone down. So again, very safe asset class. What's going to happen in 2022? A lot of that safety came from the fact that all of this was underwritten by governments. Governments are running out of money.
Yep.
The high cost of commodities is still there. So whilst I think trade finance for the right borrowers, the right counterparties is going to be around, the SME sector I think is going to continue to be starved.
And I think we heard that in the session with KFAS earlier.
Correct.
About insolvencies, and we could probably expect more uncertainty coming into 2023. So I guess moving on to what our predictions are for 2023, and I think I've asked you every single year now. We should compare notes each time.
Right.
So key predictions for 2023, and I'm going to keep going on some of these themes, but let's start with the topic on right now, ESG and sustainability. What are your thoughts on what 2023 could bring us for that?
There's a lot of confusion still about what banks need to do. There's a lot more stick than carrot. So banks have to report in the EU. Large corporates have to report on their ESG credentials, but they don't quite know how to measure it. At the same time, banks, especially banks, but also others, are being slapped for greenwashing. So a lot of the funds, for example, in the fund space, where there's a large number of ESG funds, there's a lot of skepticism and scrutiny from regulators because they don't believe that they really are. They are green. We even have people like Goldman Sachs being fined for misdescription or mis-selling. So I think we're going to get into a world where ESG, some people say ESG will go away because it's too difficult to deal with. No, we're going to have to deal with something that's very difficult. There is a little bit more clarity. For example, there'll be a reporting standards board that I think is going to come out with its first recommendations next year. This is again a long-term project, but it's not going to go away. Everybody has to get to grips with it.
Sure. And I guess we mentioned SMEs earlier, and moving to the bottom of the queue. Is trade finance as an asset class, or the development of trade finance as an asset class, either in terms of increasing liquidity available to these pools of trade finance from funds, etc., or potentially through the developments we're seeing in terms of tokenization of assets? Do you think there's more to come for that in 2023? Yeah,
definitely. That's something that we have been working very hard on. There are only a very small number of funds currently that invest in trade assets, and there's a number of reasons for that. Some are operational, some educational. Trade is not one single asset. It's not a loan or a bond. It's a lot of different underlying instruments, and people just don't understand them. But tokenization has that ability to actually smooth the path, smooth out the rough corners, if you like. That's something we're trying to do in our DNI initiative, or Digital Negotiable Instruments initiative, because you take a very simple instrument, you digitize it. I'm talking about, for example, a promissory note. You digitize that, you can then tokenize it. You can then list that on an exchange. There was a very interesting discussion earlier on in one of the panels about how you prove identity, how you prove trust. Is it done through exchange of keys, public-private keys, or is it through the use of registries? If it's use of registry, is it a public registry, a private registry? Do you have to be a user? So there's a lot of commercial value to be fought over. But people will think about that. We've been talking to one of the big exchanges in the US about, in very early days, talking about potentially creating an exchange for these kinds of instruments. A lot of other things we need to do, like for example ratings, getting rating agencies. We've been working with Fitch and ARC Ratings. It's something that the industry's been working on for a long time. I see this happening more and more. One of the issues though is yield. I mean, that's a big problem at the moment with interest rates rising. So for a long time it was, trade assets were safe and they gave you a pickup from cash, but now cash actually is more valuable than it used to be. So there needs to be a repricing. I think the industry thinks that we are in the process of doing that, and that will happen next year. So good for funds, good for investors, not necessarily good for SMEs. Again, can they pay the extra prices? How does that feed through into inflation? There's a lot of interlinked issues here. But there's definitely interest in it.
Yep.
Santander have set up, for example, a high yield trade fund. So that's the degree, at the request of clients, that's the degree of interest there is.
Yeah. Well, Sean, I think we've covered lots of key moments from 2022, from digitalization to the growth of trade, and then on to some of the predictions from an ESG sustainability perspective and a trade finance as an asset class point of view. Thank you very much for joining. More to come in 2023.
Absolutely.